What's going on, guys? Happy Sunday. We are about 11 hours away from the Open. Um, we got to get hyped. I mean, there's plenty of setups out this week. I think our trading range is going to continue to be definitely on the wider side after the previous week, 2 weeks. I think this week's going to be very active. And I just before we jump into setups and analysis on all that, I want to go over our economic schedule for the week. Pulled up here on Market Watch. This is what we're looking at this week. Now, things that I'm more or less interested in, obviously, is the weekly jobless claims. We'll hear the Fed speak Wednesday at standard 2 o'clock time, and the core CPI. So, Thursday morning is going to be a busy day. We have the weekly jobless claims and the CPI for the month of September. Obviously, we'll see what the Fed has to say. That's always all over the fucking place. Who knows? That's just a road bump in the way of what we can expect. But I think Monday and Tuesday should trade on a pretty technical basis, meaning that unless Daddy Trump or somebody else tweets something out and interferes with the current catalysts that we're working with right now, and I swear it changes every fucking day. It's been really annoying to adapt your game plan to, but as traders, we have to do that, and just roll with the punches. But if what we're working with now stays true into Wednesday when we have the Fed speak, this market could run pretty technical, which is usually solid for us if we have wide trading ranges. So keep that in mind. Definitely gonna have to have those highlighted, mark them up on your calendars, and get ready for that because it's coming. With that being said, we'll hop into the analysis part. Now, I want to focus on the SPY first, as always. Um, what I want to see happen here is if we open lower than Friday's high, which was literally right at the 13 EMA in the daily chart, I'm going to look to get short. Now, why I think I want to get short? Because that 294.37 resistance that held into the close is also the 13 EMA, and it was also the top of this balance, this consolidation zone. Now, I'm going to flip over to the SPX chart, which is the S&P 500. It's going to be easier to read because I don't have all those fucking markings on there for our levels. I have our level, what I'm looking at this week now, and I want to go over both scenarios. So if we gap lower than the high and we ultimately reject the 13-day EMA into, tomorrow, I think it's definitely a possibility to come back down and test not only into Friday's lows, but the high of, what was this, Thursday's candle, which is about the mid range from this consolidation zone, which is around that 291 level. We'll flip over here and get the exact number for you guys. 291, 288 actually. No, it is 291. 290.44 is the actual support that we're looking at on the downside. So that's going to be my downside target. 290.44. With that being said, that's kind of the downside move. What my anticipation would be, that would bring us back down towards that bottom Bollinger Band, which is going to be and going to require some sort of heavy selling coming into this market. So, as of now, the futures are trading lower. There hasn't been a lot of volume, but that is what I'm looking at if we're gapping lower. That's if we're gapping lower than Friday's high and gapping below this 13 EMA. Obviously, our stop loss would be above that high. If it breaks and we break that 13 EMA, we have room to run. If that is the case, and we do have room to run, my upside target is right around here, which is the bottom of the previous island top kind of formation where that gap filled. I believe it's around the 297 level on the SPY. It is the exact number is 295.99, which is that key resistance. So that's definitely my upside target as of now. Obviously, we always take it one candle at a time, but I have the ranges marked out on the SPX. We'll see how this plays out, but there is room on both sides of the trade. Now, that is for a gap up, and if we do decide to break out of this Friday high and break out of that 13 EMA, we could squeeze up until the 296 level pretty easily. 296, 297 is right where we get to that mid Bollinger Band as well, which is going to pose as some sort of tough resistance. Um, I personally think that's a good rollover spot. I mean, if this market just wants to fly straight up into that level, even if that happened tomorrow, I would definitely look to get short up there as well. Um, that would prove to me that this is somewhat of a short squeeze or even just a short covering. Given the fact that there hasn't really been a lot of volume, that this move that was made the previous 2 days is all on hope from the Fed. Um, that jobs report was pretty mixed. It was just overall, there's not much left for me to sit here and say, okay, this is fueling the market. I think the market is getting very tired of tweets and on hope. Obviously, what would change the overall sentiment is a trade deal, right? So, we can't really play for that right now, but as of, where we stand right now, we have to take bets and place our strategy on what would happen in either direction. So, with that being said, where our levels are and what our targets are for both the upside and the downside, there's definitely room to both. Whatever the case may be, we got to roll with it and do our thing. I have setups on two stocks, Comcast and Disney. I want to go to the Comcast setup first. CMC SA is the ticker. Similar setup as the SPY. We have a very great support level that actually held Thursday session. We bounced off into Friday at the 44 price level. Similar setup. I have our range marked with this rectangle. Our bottom here is at the 44. I'm going to look to get long this stock as long as we remain above 44. Now, that means, one, if the market gap's lower and we start to pull back, I'm going to look for a pullback in this Comcast to long the market as long as we remain below the 13 EMA on the SPY. And just hold this and see how this plays out as a swing trade. We're very oversold in the MACD. We have room to squeeze above this 13 EMA pretty easily, break out of this little consolidation zone and head back towards the 46, 47 price level. The top of my range here is marked at 45.26. So if you get down near the 44.25, you have about $1 a share to risk, like 30, 40 cents. So a 2-to-1, 3-to-1 ratio here on Comcast. I kind of like that. I would probably use my capital here and grab shares instead of options to give myself more time and avoid the time decay. It is a fairly cheap stock, but this moves like a blue chip and it moves nicely. I don't necessarily know the options spreads on Comcast. I've never traded options on it before, but definitely a setup to keep an eye on. Like I said, that 44 support level has been holding. Another potential squeeze, breakout up until that 46 target range. My main sell target is going to be 45.25 and then 45.75. Which is right where that mid Bollinger Band is, and the bottom of this previous island top with the gap, similar to the SPY. But definitely keep Comcast in mind. Look at it, do your analysis, do all what you do when you look at setups. But I think there is awesome potential here. Kind of a slower moving stock in terms of price action, but those can really give you great leverage to manage your capital wisely and diversify your portfolio. Next one I want to head over to is Disney. We're going to pull up the yearly chart. Disney, Long Island top here. We have a support level at 127.50, which was the gap support here. Now, the gap has held so far. Thursday session tested it, bounced off it on Friday, and we got that nice bounce from 127 up until the 130 range. Now, why I think this is key, it gives us a bottom for now, which means we could get long on pullbacks, and I have a support level marked down on the 30-minute time frame at this right here from the bottom here on last week's Thursday and Friday session at the price level of 129. This is an ideal support level for me if I'm going to look to get long this market. I would look to long Disney at 129 and play the bottom here. My obvious stop loss is at the break of this gap at the 127.50, but I think the upside potential on Disney could be anywhere up until this 134 range, to say the least. So you're risking about $2 per share to make $4 a share. A 2-to-1 risk reward ratio. That's on the long side. Short side, if the market is weak, we start to sell off. This gap to fill right here from 127 to 120, $7 a share to risk on the downside. Sure as hell, I'm gonna look to play this. This is a island top gap pattern. This could take longer to fill, but it is definitely there, and definitely keep your eye on it if the market weakness comes into play. But like I said, upside target of about 133, 134. I'm going to look to long if the support at 129 holds. Look for a pullback in the market tomorrow if we gap lower. I might look for some SPY puts if we gap below to hold for the week, and then adjust with the setups on Comcast and Disney both. Um, just to diversify my portfolio for the week and keep my trades pretty active, and focus on these daily charts and not really trade Disney or Comcast on the 5-minute, mostly focusing on the hour and 30-minute chart, and then obviously the daily as well. So keep these setups in mind. Also, let me know what you guys think. I like the setups I was seeing today in the members chat. It was pretty refreshing to see, a different list and different things to choose from, and what suits you best as a trader. I think these suit me best, and I think the visual aspect of this really stands out to me and provides me with some awesome opportunity going into this week. So with that being said, I'll see you guys in chat tomorrow. Definitely leave me some feedback if you made it through the whole way. It's been a bit of a longer video, but I wanted to get this done and really show a nice visual and, pick my brain for you guys to, see how I'm planning for the week and, take it from there. So I'll talk to you guys tomorrow. Enjoy the rest of your night.